Hello, my name is Jonathan Swift and welcome to the latest episode of Insurance COVID Cast, brought to you by Insurance Post and Insurance Age. And today we have another special linked with the Insurtech 100 from Sonar and Insurance Post. Today focusing on distribution. This is one of two episodes we'll be doing looking at distribution. Now I'm delighted to say joining me for today's discussion we have Hokodo co-founder Richard Thornton, Kasko's CEO and co-founder Nick Sühr, and finally Wrisk CEO Nimeshh Patel. Hello all gentlemen.
Hello.
Hey everyone, pleasure to be here.
Yep, thanks for inviting us.
So first things first, I'll come to you first, Nick. What have been the most significant developments within your business over the last year?
So I think the most interesting for us was more of the same and better and faster. So not finally, but eventually getting from the jungle onto the dirt track and having found our stride and optimizing, I would say, evolutionary on the edges whilst having spent a couple of years in the jungle. So that has been very exciting for us. Maybe less so being on an Insurtech stage and, we haven't done too many 180s lately. But we find that very exciting from a business perspective.
Okay. Nimeshh?
Well, for us, the last 12 months has seen significant developments. You think about Wrisk, our whole premise as a business is to make the experience for customers when they go to buy insurance simple, transparent, personal. And really, we started off with a minimum viable product that was B2C focused. And I think the key change for us over the last 12 months or so has been to really change our distribution model. What we realized going B2C was that essentially we were going up against incumbent balance sheets where the cost of acquisition, whether you use, paid search or for that matter, aggregator sites, just too high for the personal lines business. So we completely refocused our entire business towards a B2B2C strategy, where if we can seamlessly insert our product at the point of sale, then with what is a delightful product at the point of sale, by working with the world's biggest brands, then potentially that's a way to distribute, or a third tier of distribution.
And finally, I'll come to you, Richard.
Well, actually, Nimeshh has kind of set me up a little bit because that kind of whole idea of integrating into the distribution, into a distribution partner's sales channel is really our kind of DNA. So we set up Hokodo as a business which was deliberately B2B2B. In other words, we integrate into the technology platforms of our distribution partners, and our distribution partners are companies which have small businesses as their customers. And that business model has some advantages. So, it means you don't have to lay out the big bucks acquiring customers through paid search or TV advertising. But it brings some challenges as well. And probably the biggest one when you're a startup is you can't, it makes it much harder to launch an MVP. To persuade a significant brand to integrate your solution, you need to have something that, really does the job well, thinks about the edge cases and doesn't break down every other day. And that means you've got a lot more of a build to do before you can get out into the market. And so for us, 2018 was really the year of getting all of the infrastructure in place, the technology, the algorithms, the operations. And then the last year has really been about starting off with small distribution partners and gradually building to bigger deals. And so at the end of 2019 and early this year, we launched a bunch of landmark partnerships. So in the accounting space or partners associated with creating an invoice, we partnered with Sühr, which is the largest accounting platform in France. We partnered with Tide in the UK, so now all Tide small business customers, when they create an invoice, get a little button saying, would you like to protect this invoice against non-payment? And we partnered with Shine, which is a French digital bank kind of similar to Tide, but purely in the French domestic market. And then the other strand that we have is online marketplaces, and a couple of quite important deals for us. So in France, we've partnered with a marketplace called Mano Mano, which some of your UK viewers may have seen started advertising in the UK in the last couple of weeks. But in France, this is a really massive D2C business. So it's doing over $1 billion in transactions of people going online to buy DIY equipment and so on. But Mano Mano has a large and growing B2B business as well. And so we take care of the credit risk of those B2B buyers who are purchasing on credit terms. And another platform that we think is going to be a real winner in the future called Anchor Store, which is a kind of European equivalent of Fair, if those who have come across Fair in the US. So it's a marketplace where home furnishings retailers buy their stock, and founded by a very impressive team that we think is going to go a long way. So for us, getting those kind of first significant partnerships with really important players under our belts. And then the last thing I'd say is we actually launched in France in the last 12 months as well. So 12 months ago, we were only in the UK.
Can I ask, Richard, obviously, as an Insurtech business, you are kind of, a startup, a new kid on the block, so to speak. How is your business seeking to change traditional insurance processes, and how amenable have you found the actual industry and the sector to accommodating your ideas presently?
So, I mean, we don't really think of ourselves as disrupting insurance per se. And, in a way, I mean, I think this is common to many Insurtechs, but we're not really looking to cannibalize the business of existing insurers or to take business off them. We look at the SME market and we see a massive untapped opportunity, and particularly in the area which we play in, which is credit insurance. Most small businesses, when they're accepting orders from customers and they're offering credit terms, that risk that their customer doesn't pay them is something that they're taking on their own balance sheet. The industry is not really serving SMEs when it comes to credit insurance. And the reason mostly is because of distribution. So it's not worth the broker's time to go and sell to a small business. There's just not enough commission in it. And so we're looking at a market that's 99 or 99.5% uninsured. And we're trying to find new ways to reach that market. So we don't really see ourselves as disrupting insurance. We see ourselves as trying to do something that's very different and in our view, much more suitable and tailored to the customers that we're serving. And of course, we work with insurers to do that. So we're not an insurance company, we're an MGA. Our capacity is provided by the Channel Syndicate, so part of Sühr. And I'd say our interactions with them have been fantastic. They have a strategic priority around supporting Insurtech and supporting startups. We've been extremely demanding in terms of, wanting to change our policy wording for every new partnership and constantly thinking of new whistles and bells that would make our distribution partnerships more effective. And I think that's part of a B2B2B model, unfortunately. And they've been really accommodating and turning those things around and very kind of responsive. So I haven't really got a bad word to say there. I think if you're trying to disrupt the core operations of an insurer, you're trying to get brokers to sell new products or things in a different way, or, then things become much harder. But in a way, what we're doing is almost like a kind of greenfield thing that's kind of off the side. And so we have a great relationship with Sühr, and it's worked very well for us.
Come to you, Nick.
So our business model, Insurtech as a service. So we partner with incumbent insurers or Insurtechs, and we really want to commoditize the Insurtech infrastructure. And by our definition, that's everything an MGA does, right? Subscription rating, underwriting, admin, reconciliation, billing, invoicing, that boring stuff, like an e-commerce infrastructure, but for insurance, which is that makes it so interesting. So many different bells and whistles that requires, and we so what we try to optimize is the kind of IT and ops spend on an insurance policy. And we believe in not ripping and replacing legacy infrastructure, layering on top, and then really bridging the gap between, let's say, capacity and capacity from an underwriting, but also service capacity and the various distribution touch points. So as an example, this can be, we would digitalize, I don't know, a cyber insurance product for Zurich in Germany, but it could also be, reaching out to Richard and his team and to say, guys, you have such a great product, and why don't you serve this as a white label proposition to incumbent insurers and their agents who also have customers, and why can't we make this work and be, kind of reducing the costs of insurance delivery, and that makes it super interesting because you're always putting pieces together. But I cannot stress this enough. I don't believe insurance is fundamentally broken, and I think any Insurtech going direct to the market is finding that it's really hard to convince your customer who really doesn't care that much about your product. So we do see a theme here around going B2B2C, and actually taking the direct-to-consumer learnings to your partners. But we're very much on the enabling front, and we like to play with really anyone, quite frankly. We're quite nice to be around, I guess.
Finally, I'll come to you, Nimeshh.
I mean, I think, look, one thing that we've learned is to be super focused. So, when you think about working with big brand verticals at the point of sale, you can point the platform to multiple different partners. And, we can do that, but we've been highly focused on the automotive sector, as we believe mobility as a service will become a real thing. And through our partnership with BMW, we've learned a lot, and we are bringing to market some really exciting products that really do challenge, our insurers. We have our capacity backed by, LV and also Munich Re. So real high quality insurer partners. But we're a test and learn business. So we're trying to test certain things like subscription. Can we actually, will subscription prevail in the marketplace, which enables us to be able to have customers who are on the platform really do real-time MTAs. They have the flexibility of cancelling at any point in time. All of those kind of things will come to the fore, and it's something that we have pushed out into the marketplace with minis at this point in time. Also, on top of that, we also think that there are, when you look at the customer patterns and customer behaviors, there is this notion of making sure that your platform is future-proofing against customer trends. And we think that the automotive sector is going through a humongous change. And, one thing that we see more of is Insurtechs coming to market with different, rating models, like usage-based rating models and so forth. And we did announce a partnership with the RAC where we'll begin to start testing out a pay-as-you-drive insurance model with them. So clearly, in times like COVID, those kind of models are something that we want to explore. So I think there will be a wide-scale disruption more in the mobility space, and it is absolutely important that the insurance proposition meets those changing behaviors and trends in the marketplace. And I think that's where the Wrisk platform is set up to really deliver against that. And so we're pretty excited about the future. Clearly, one thing that I find is that, it's important as we try and really attack these different verticals to build really, really strong knowledge and stay focused, stay on course. And, the mobility sector, it's taken us 2 years. We've learned a hell of a lot. And one thing we're passionate about for our mobility clients, particularly auto OEMs, is to help them improve conversion of taking insurance at the point of sale. And we're doing that. We've already begun to start double, triple conversion rates for BMW and for Mini, which is something pretty exciting. So clearly, having a very simple product and having it seamlessly integrated into the digital experience is something that will be paramount going forward. The other key disruption is a little bit to what Nikolaus talked about for us, which is whilst we are absolutely focused on delighting our brand partners' customers with an experience that is simple and transparent and flexible, it's also important that we actually service those customers at as low a cost as possible. So, something that's important is that, we're trying to change the way in which we service our customers so that essentially the cost model is so much more advantageous to us.
And Nimeshh, you mentioned COVID and the impact that might have on mobility in the widest sense, but how has your business adapted to the kind of lockdown since March and the whole coronavirus pandemic?
You can imagine that, a business that is targeting scaling insurance at the point of sale is in the eye of the storm, and we've lived it for the first, the last 2 months or so. It's really interesting. The first thing we really did as a business is to get all of our people safe and able to actually protect our revenue base. We have quite a lot of policies that we're writing on a monthly basis, particularly with BMW and Minis and so forth. So, very, very quickly, we basically built a remote working solution for our customer center, leveraging Twilio, Flex, et cetera, so that our folks could take calls from their home. And we kind of shut down our offices, with 2 weeks before it was all announced by the government. So it was a very interesting experience. And then we watched for two months what would happen. And what's really interesting is that clearly, whilst our volumes have fallen off, people were still taking new business car insurance. We were very, very surprised. We had a record quarter and a record month in the month of March. Actually, we've done pretty well in the months of April and May. And clearly now what we're seeing is, beginning to get back towards pre-COVID levels, in terms of volumes, in terms of the number of driveaways that we are selling on a daily basis and so forth. So it's been a very, very interesting to watch. And I think for all of startups, we've had to plan very aggressively. We've had to cut costs. We've had to, take advantage of state aid programs. All of those things, we've done. We're now beginning to come out of it. And we do see that there is decent demand, for our products. So it's been a challenge, but it's been more positive, actually, and a lot of discovery through the process.
Richard, has your kind of experience during COVID-19 been as positive as Nimesh's, with the challenges as well? I think I'll take your microphone.
Yeah. So it's probably quite similar. I mean, from an operational perspective, it's relatively straightforward for us to work remotely. Everything's in the cloud, as you'd imagine. So that transition is more about culture and office dynamics than it is about anything kind of, technological. So that's been, I'd say that's been fine on balance. One of the challenges we face is what it does to our claims, because we're insuring customers against the risk that they don't get paid. And as you can imagine, there's some sectors at the moment where, the buyers have no revenue at all coming in. So we've insured some platforms where there's a lot of restaurant clients, for example. So it's very hard for a restaurant to settle an invoice to one of its suppliers when it's forced to close down for 3 months. And so we've tried to work with our customers, sort of portfolio by portfolio and buyer by buyer, to navigate a way through that. In some cases, it results in settling a claim and then us waiting to get paid. In other times, our customer prefers to give their buyer a bit more time to pay, and so we've been willing to extend policies in certain cases. But it does make it a kind of very challenging environment to navigate through. But I think it's also kind of highlighting two opportunities for us. One of them is just an increased perception of the need for credit insurance. So I think there's not many small business owners right now who are not aware of the risk that their customers may not pay them. whereas it might have been something that people didn't spend too much time worrying about in the past. So that's kind of the obvious one. The other one that I think will be really interesting and will be really long lasting and structural is the shift to online for making purchases. And I guess everybody's kind of aware of that on the consumer side, because we're all buying our groceries online now and all the rest of it, and buying pretty much everything online. But on the B2B side, which is where we focus, that's been a much, much slower trend. So probably less than about 7% of B2B purchases are made online. And now if you think about the current situation and the next year where, things like trade fairs are all being cancelled, we're seeing increasing numbers of businesses saying, well, do I really need to go and meet my supplier to do this? And actually, if I'm not going to go and meet him, maybe there's someone who's got a website that's got a much better product catalog that I can just purchase from, and much, smoother fulfillment. And I can just get this whole process done without emails, phone calls, faxes, bank letters of credit, all the rest of it. And so the partners that we're working with on the kind of, the marketplaces, the online B2B retailers, those guys are really now seeing an uptick in demand, particularly as the kind of lockdown comes to an end in different countries. And I think that will never reverse. Right? I think people who have got familiar with buying online will stay that way. And what we're trying to do is be one of the facilitators of that, to try and make that process as smooth and easy for a business buyer online as it is for a consumer online.
And finally, I'll come to you, Nick.
No, I think, I can only agree with everything that Nimeshh and Richard have said. I think from an operational point of view, the interesting thing for us was we've always been a flexible working company, but not a remote company. So we wanted to have people come into the offices, although we're spread around 3 different offices. And now we're finding out what remote work means. And I think we will offer that as a choice. So that is quite interesting, because I really like to work remotely, quite frankly. I think the second thing, what we found is, as we are in the space of digital transformation for insurance companies, especially at the intersection of distribution and product, that has been an uplift in terms of awareness, especially with probably most agency-focused carriers, and that's basically all of Europe other than the UK. They've seen drops in new business 70, 80, 90%, because it's literally still face-to-face. Now, what we've seen is a massive uptake in interest, in conversations, in offers made. Also availability, because no one's wasting time on the road. People are available and they can actually work. And that has been, we've been the best months since March, April, never seen as many, such short from initiation to offer. Now, the interesting thing is, does that translate into purchases for our insurance carriers, right? And I am an optimist by trade, but I think we have a structural benefit. We always priced ourselves at the kind of below 50K margin, because we wanted to break an enterprise sale into a small of SMB type sale. So we would literally go to the different business units. And from our experience, there's still budget for anything that has a very high probability of 12-month turnaround on a business case. And we've been structurally aligned to that. So I think we have a very strong competitive advantage, because we can compete on price or value, if you like. So since there has been no personal loss, very, very lucky for that. I think this has been good for us down the line, but we'll also monitor this, and time will tell. We're not out of this in any way, any shape or form yet. So I've never seen, I've seen 2008, tried to get a job in 2008. That wasn't fun. And let's see. But I think all of us here will be beneficiaries from the acceleration of the structural trends that we base our business models in. And as long as we can, stay afloat, I think everyone in this call will be a big winner.
Well, I have to say, I mean, obviously, you're all winners in the sense you've all made it onto the Insurtech 100, so congratulations for that. But and the answer to this might have changed over the last few months, but what was on your to-do list, or what is on your to-do list now for the next 12 months? I'll start with you, Nick. What is on the kind of Kasko plans?
So I think there's three things. I think from the distribution front is scaling, but for us, what that means is explaining our solution even more so in concrete use cases. So not to say, hey, what would you do if you had 30 to 50K budget and could launch in 6 weeks, but to say, hey, why don't we inject someone like Hokodo into your SME proposition, like very concrete, and get some use cases and kind of make that work. The second thing is on our product roadmap. We have a couple of exciting propositions. The most interesting one is accelerating our self-service, so we can open up our platform to external developers to take ourselves out of that bottleneck situation of delivery. And I wouldn't say democratizing things, because that's not, it's not about democratizing. It's just about granting access to wherever the capacity is. And then I would say thirdly, for us to actually move both up and down the market. Up the market by partnership through big consultancies and delivering our solution into the large digital transformation, burning platform, reducing product complexity during migration, but also down the market and finding propositions of actually digitalizing offline MGAs and brokers who already have access. And that's quite interesting. So not going to be boring.
No. Richard, I'll come to you. I mean, in terms of Hokodo, what have you got lined up for the next 12 months?
So there's probably three things we're focusing on. The first one is international expansion. And that's partly because we think there are a lot of other markets where our solutions are applicable. And it's partly because some of our distribution partners are themselves present in multiple European countries. And top of our list right now is Germany. So we're looking to launch in Germany this summer. And so we're building all of the algorithms and the credit scoring and the data supplies and all that kind of stuff to be ready to do that. The other two things are interesting because they're both moving a little bit away from insurance. So on the accounting and invoicing side, we're looking at broadening out our set of propositions that we offer through that channel. And if you think about the process that a supplier goes through from accepting an order through to getting the cash in their bank account, there's a bunch of assets that we have that can help them beyond just credit insurance. So things like being able to assess the risk of a buyer, being able to set credit limits for a buyer, being able to collect overdue debts even if they're not insured. These are all things that we have in our armory, and we needed them to offer insurance, but actually they could be quite valuable to our customers separately. And so we're looking at how we can kind of meet more of those needs on that order to cash cycle. And then the last thing is around marketplaces and online businesses, where we're looking at different ways of bringing financing in as well as credit insurance. And what we're seeing is that some of the partners that we talk to only need credit insurance, other ones need credit scores, other ones need financing, other ones need the whole package bundle together. And there are lots of different ways of doing that. And we're still working out, the ones which work best for the right types of partners. So that's a big area of focus for us at the moment.
And finally, I'll come to you, Nimeshh. What's on the to-do list for Wrisk over the next 12 months, next year?
Well, clearly, I think one thing that's really unusual around COVID is that a lot of parties, come to you with opportunity, and that's something that we found. Clearly, if you have a platform that either takes out cost or drives up more revenue scale for other partners, there are a number of opportunities there for us. And what we realize across the board is that, we want to really continue to develop our platform capability. So we have as comprehensive a solution as possible, so that when a partner comes to Wrisk, let's say for a mobility-based insurance solution, that actually what prevails is a lift and shift type strategy, as opposed to us building something entirely new or bespoke for that customer. So I think that's a key area of development that we need to do. The second area for us over the next 12 months is to really double down on our existing partnerships, to get a small pilot with the RAC live for a national launch, but also at the same time extend out yet more programs for BMW to help them improve even further their conversion of customers taking insurance with them. And then with the pipeline that has been built, we want to continue to sign up those partners and get things live over the next 12 months. I guess the final thing for us, and I don't think it's one that all startups really have, is capital planning, right? So, we will be looking to do a decent fundraise, over the next 12 months, so that we can scale further, and also really explore some of our deep-seated strategic partnerships. We signed a partnership agreement with Allianz Automotive, and we talk about international scaling, Richard. The key thing for us will be, how can we extend what we've built for BMW across multiple OEM marks, across different jurisdictions? And clearly, we've set the contract so that we can do that, but clearly that will need some capital. So that's really our focus over the next 12 months.
Okay, well, thank you very much, Nimeshh, and thank you also, Nick and Richard. It looks like to be a very exciting 12 months for all three Insurtechs.
Thank you so much for your time.
Thank you.
So just to remind you again, this is obviously part of the Insurance COVID Cast, which is brought to you by Insurance Post and Insurance 8. If you want to subscribe or register for either title, then please use the login thing in the tab up above me here. Anyway, but we have more of these Insurtech COVID Casts coming up, so please keep a lookout for them. But until the next one, it's goodbye from me, and stay safe, everybody. Cheerio.